What is up, team? Chuck with Traders War, and I'm back at you with another video. And of course, we're coming to you from the best trading platform. And today's video is the Saturday Tech video, and we are going to cover market recovery strategies. And these are the shapes of market recovery because I want everyone to understand where we're at and what we could be looking into because it's important. And you can follow us on traderswarroom.com for more information on all the products and services that we have. It's easy. You Google it. We're right there. So definitely come check us out. All right, team, welcome back, guys. We like to go ahead and give you guys a recent alert check so you can kind of see what type of stuff we provide on the regular here at Traders War Room, especially in our Discord server. So, guys, we give out those real-time alerts. And excuse on the top right there, or excuse me, top left, that's a misspelling, but that's Bank of America, Wells Fargo. We killed the financials last week. We also had a couple of decent trades with Path and the semiconductors, and we went ahead and got some healthcare and traded a little bit of the indexes. So definitely various styles, something for everyone. And guys, all of these were swing trades. So there's no reason you can't make some money off of the trades that we provide. And these are just my trades. I have 25 other analysts that put out alerts just like I do and do their thing. Various styles, various tickers, various type of strategies. So here's a little quick of what we got on the server. These are all the live trading channels. Plus we got the futures trading. We also got sports betting. We also got all those data quant. We got trigger watch lists and in-depth reports and those algorithms. We also got all sorts of alerts, guys, days, swings, spreads, leaps, stocks, crypto, guys, something truly for everyone. And we got the research and development center as well, so you can do some self-learning on your own. Truly something for everyone, every style and every type of budget. And the end goal is, if you want consistent winners like these and something truly that is offered for everyone, then all you got to do is join TWR, come trade with the bulls, and come and get some. Right there, you can find all the information. Without further ado, let's go ahead and get into it. Topic today is market recovery shapes. And I want to go over this real quick, and we are talking about a few shapes. So the buzz is centering around these three words: market recovery shapes. That's all you're hearing about right now in the media. And, what shape are we in? What shape are we expecting? Because recession is looming in the, market and in the economy and in the investor's mind. So what's significant about these is that these are associated with another buzzword that we're hearing a lot. And I just said it's recession. So go figure, right? But when the shapes do, how do they resemble? What are the shapes that we're looking for in the market? So there's a couple popular shapes, and the popular shapes that we're really looking for look like a V, U, W, L, and a K shape. K shape's kind of new, and we'll go over each one of these in a little bit of detail so you kind of understand what we're talking about. So what do these shapes look and mean and look like, right? All right, here we go. The V shape. Basically, what you're looking at the V shape is it's a sharp economy decline. A catalyst event usually is causing that decline, almost immediate return to the previous levels. And it looks like this. So you can see right there, the GDP, and you got to understand these terms, all right? GDP, the business cycle, it dumps. And then we have a little bit down at the bottom, and then it recovers very quickly. And then we go on to a new peak. All right, the U-shaped recovery. I messed that up.
Season 20. Depending on each other.
All right, now the next strategy that we're talking about is the U shape. Okay, so the U shape is when the economy declines, spends more time at the bottom. They call this a through. Recessions last longer, and it looks like this. So you can see the business cycle, sharp decline, and then at the bottom, it starts to slowly recover, coming back up to the top, and then eventually making a new peak. The W shape. Basically, the W shape is a sharp economy decline with a sharp economic recovery and another recession that dumps, lasts a little bit longer, and then eventual recovery to recent highs, but not the medium. And it looks like this. So you can see the business cycle there, sharp decline that almost looks like an L shape. And we'll go over that in a second. You get your brief recovery. And sometimes this brief recovery can fool out the bulls, thinking that the bear market is done and the bull market is upon us, and they get caught in this one. And then you have another whammy of a recession that lasts longer, and it's a little more of a slower pace dump. And then you get your push to the new peak, but it doesn't quite hit the medium of the previous high of the cycle before we hit the downward trend. So definitely paying attention to this W1, because this is kind of where we're thinking the market is currently from an economist standpoint. However, it could be that, we're looking for a little bit more downside. Truly, and I'll explain it here in a second, you don't really understand what shape you're in until the recession is actually over, and then you can analyze it. The L shape, the most undesired one. Basically what it is that sharp economy decline, slow recovery, and we stay at the bottom for a while. Recession turns into depression, and that's a key word that you need to hear. We haven't been hearing too much of a depression around, still some bullish sentiments as far as the forward potential is looking. However, you got to keep that in mind when we start to hear those buzzwords. We need to start turning on light bulbs in our brain. And it looks like this, got that huge decline in that slow growth at the bottom, very slow. And this is what really hurts people over the long term, such as a depression. And this one's rather new, the K shape. So basically the K shape is the newest shape, and it's linked to COVID. A lot of investors have kind of put this into a COVID pandemic type of environment. And basically you get the sharp decline, which is the recession. And then you have some areas that recover very quickly and some areas that don't. And it affects both industries and individuals, with some of the industries thriving, like some of the healthcare industries thrived during COVID, and some of the retails dive, right? And some people that were, inside of, affluent, neighborhoods and affluent, market spaces and stuff like that, they were thriving during COVID, right? Because business was good, and then other ones, such as people that, owned, small businesses and retail shops and stuff like this, they definitely dive. So that's where we get this kind of the K-shaped recovery. And I'll show you the picture real quick. And it looks like this. So you got your business cycle on the peaks, the dump, and then you get the growth where some are recovering very well. And then you got some that are staying stagnant or kind of look like that L shape that we just covered just a few moments ago, where it's the slower recovery or even continuing down over the long haul. And different things affect us, inflation, recession, and then, potentially, not being able to operate in their realm. So definitely paying attention to that as well, because we're seeing a lot of K-shaped recoveries as well in the different sectors that are associated within the stock market. So here, compare and contrast, right? Basically, the V and the U shape are the most common. The V shape is the most desired. The L shape is the most unwanted, and we can see why. And the severity of recession is most important. And a dump of 1% GDP with a U-shaped recovery doesn't affect as much. Yes, it's affecting, but it doesn't affect as much because you got that U-shaped recovery from 1%. This would be potentially more desirable of a recession than, say, a 5% dump with a V-shaped recovery, because everyone's like V-shaped recovery, but it's the impact of the overall dump that put into the recession into effect that is really what is holding people, because the sharp decline of a dramatic fashion could definitely potentially take other people out for a longer period of time, even as other things were, recovering. Certain companies, certain industries, certain people would never bounce back from that into the V shape because it was such a dramatic dump. So that's kind of the idea where you want to think about the severity of the recession as being the most important aspect and not the recovery per se. The recovery is important, but like I said, a 1% GDP recovery from recession that is a U may be more desired than a 5% dump with a V-shaped recovery. So the conclusion, basically, unknown recovery shape when actively in recession. You don't know the shape of the recovery because it can't be analyzed because you're still in it. All right. Right now, whether people want to admit it or not, you're looking at all the flags and out there, we are in a recession. Okay. And usually recessions do not get publicly noted until they are already 6 months into it. And there's no way that you cannot deny it. So, it's one way of a plausible deniability, I think, in a political spectrum, but everyone's feeling the crunch in the pocketbook. Key metrics when you're looking at recession and growth are the GDP, employment, and inflation. And you guys have heard those, I'm sure, if you pay attention to the news and the market. These are linked very closely. So this is really what's our key metrics. And there's some other ones, the housing market and some other things. But GDP, employment, inflation are the key metrics that are being looked at as far as looking at how the recession is being recovered or if it's the continuation. Preparing for the worst and hoping for the best. So you guys need to get prepared for a dramatic decline. I would rather you be prepared for the dump and it not happen than you be just expecting that we're just going to V-shaped recovery and boom, off to the rockets and to the moon we go, and then you get caught with, a double whammy, like a W-shaped type of recovery. And so we need to be prepared and head on the swivel, okay? And that kind of goes into educating yourself on economics, both domestic and international. You got to understand what makes money on a big spectrum, not so much as I do, 40 hours of work, I get paid this, but we're talking about, what causes economic growth? What causes economic decline? How does money work in both a domestic and international sector? And you want to trade. If you're trading, follow the trend and look for momentum. So trading is different than investing. For trading, we're momentum traders. We're following that trend. Okay, big money. We're following moving averages. We're following price action. We're looking for the direction of what the market's going so we can go long or short and make money on both sides. If we're investing, we want to purchase on dips, and we don't want to stop investing, but we want to get the best price. You can only buy so many dips. But if we're investing, we're more in it for the long haul. And we want to get the best price possible. So, definitely taking advantage of free money that you can utilize to invest in is a good idea, especially on a lot of discounted stocks like Meta is hugely down, and it may go down more, but it is definitely a huge dump from where it was previously. Disney, one of my favorites. It's a huge dump as well. These are things that you want to look at, especially if you got some extra cash laying around, buying these things while we're low so that we can always, ride this over the years on a recovery. All right, guys. So important note, lots of bullish sentiment going on in the marketplace as the market closed last week. It's all dependent on the FOMC minutes coming up this week and Powell's tone of next week. So we aren't risk adverse here at Traders War Room. Rather, we like to look at ourselves as cautiously optimistic. So we want to be bulls always, but if there's a bear sentiment, we're going to ride the bear train or we're going to ride the bull train, but we want to be prepared to go to war. And that is the whole idea here. With Traders War Room, we just want to be prepared, head on the swivel, and we want to make educated decisions. All right, guys, so that's the tech video, and that is it. Up next is Traders War Room products and services that we have going on. If you don't want to hear about those, go ahead and stop the video now, and thank you for your time. But please check us out on the website, and you can look inside the description for direct links to all products and services. Other than that, if you want to rock it with us, then we're going to go ahead and go on. So some products and services, we got something for everyone in every style. That's what we're about. This is basically covers everything that we provide at Traders War Room. Whether you're looking for those real-time buy and sell alerts, live trading, we got the mentoring, trading classes, fantastic community. Something for everybody is truly our motto here, and you can definitely check all of our products and services out at the description in the bio, or you can go to our direct links. Allow TWR to assist you in being consistent. So we have the one-on-one mentoring, which is a great way to help you develop skills, gain confidence, receive guidance, refine strategies, or get just a pro perspective to explore new plans of attack. And that's what we're trying to do. We're trying to develop, grow, learn, and share, and make money, utilizing the stock market as a vehicle. And if you need some help becoming consistently profitable, Traders War Room can help you out. Go to that website right there, book your session, and we'll get you taken care of. Every session is recorded, and you receive that recording as a tool and a reference point. We got an idea here at Traders War Room where every battle needs a battle plan. And basically, we do these classes. Okay, we have upcoming and historical classes, and our upcoming classes are always on various topics and styles. And our pro investors teach them live via our business Zoom account. And if you can't make the live, session, we always put them on the historical site where we have all the videos right there at your fingertips. You make the purchase, and you get 24-hour access right there on the website to watch them, just like any other video platform, YouTube, Rumble, any of those. You can watch it right there 24/7 at your leisure and get your education on. So definitely check out what we have in store. And we do this and update it often. So definitely come back multiple times and see what's new. And we got the platform for instant messages, less noise, just alerts. Guys, if you are getting bombarded and overwhelmed in your current trading platform, definitely maybe check out Traders War Room Instant Message Alerts. So basically, we got two channels right there. You got your alerts channel where you get all the fire alerts, and you got your alerts lounge where you can contact and chit chat and talk shop with other people, or you can just get the alerts channel. The alerts channel is the one that is premium, and lounge is an additional feature, and you don't have to go into the lounge. You can just get the alerts channel if you want, but we like people to be engaging, but it's up to you guys. And you go to those websites right there, you can check them out. And definitely, if you want less noise and just alerts, this may be the platform for you. And we want to talk about our formal course that's 6 weeks long, 2 classes per week. We have the options trading fundamental course. Now we are into course 2 of this trading course, and we're definitely looking for our 3rd course. And so we got it scheduled already in October. So get ready to learn more about this and our next course in 2022 in October. And you can go to the website right there to see what it's about. And I hope to see a lot of attendance there, because we have been slowly gaining momentum on this, and we're getting a lot of great feedback, and individuals inside of the class are learning, they're leaving testimonials, and it's truly a fantastic thing that we offer here. And we're glad we're able to put it on for people. And that's it, guys. I want to say thank you from Traders War Room and our official Battle Buddy. We have this saying that we like to say, and we want you to quit wasting that money that's not making money. And we want you to join Traders War Room today. There's all the links on the right-hand side. There's our Battle Buddy on the left. And guys, with that said, remember, we're looking at the stock market like a war zone, with stocks and sector being our battle. We want to attack, we want to conquer, we want to destroy, and we do that together as a team. If that's something that you can get down with, then all I got to say to you is follow me, and let's go to war together, Traders War Room. Let's go out there and kill it when that bell rings on Monday. Later.